In a trading business, the cost of goods sold is the major expense. But the cost of goods sold sometimes includes more than just the cost of sales. And the best way to remember this is to remember the definition of the cost of goods sold. Cost of goods sold is the cost of the sales plus any additional cost to get the stock into a condition and position for sale. What does that mean? That means that the cost of goods sold is going to include items such as the cost of sales. That'll always be included in the cost of goods sold, the cost of sales. But there's some additional items that are sometimes included. A common one is cartage or freight inwards. That's the cost to get the stock from the supplier to the business. That's a part of the cost of the goods sold. Another one is stock transit insurance. That is insurance of the stock whilst it is coming from the supplier to your business. So let's talk about the definition again. It's the cost of the stock, cost of sales, plus any additional cost to get the stock into a condition and position for sale. Common examples are, of course, the cost of sales. That'll always be included, but sometimes cartage inwards, which is sometimes called freight inwards, and stock transit insurance. There are some other possible examples. Here is freight inwards instead of cartage inwards. Customs duty is another possible one. That is a government levy on imported stock, customs duty. So it becomes a part of the cost of goods sold as well. And sometimes you see a generic term such as buy-in expenses, which really includes any additional cost to get the stock into a condition and position ready for sale. So the cost of goods sold, this is the major expense of any trading business. It always includes the cost of sales, but it sometimes also includes these additional cost of goods sold items such as cartage inwards, stock transit insurance, sometimes freight inwards, sometimes buy-in expenses, sometimes customs duty. And you should remember this definition of the cost of goods sold. The cost of sales plus any additional cost to get the stock into a condition and position for sale. If you look at this income statement, the cost of goods sold, the value is this figure here, $21,500, because it's the addition of the cost of sales plus, in this case, cartage inwards and the stock transit insurance. In this next example, the cost of goods sold in total is $33,500, made up of the cost of sales, freight inwards, and customs duty. And in the last example here, the cost of goods sold is $24,000, made up of the cost of sales $20,000 and buying expenses $4,000.